Good morning, ladies and gentlemen. And on behalf of the Islamic Finance Council UK and our sister organisation, the Global Ethical Finance Initiative, a very warm welcome to this morning's event, which will be looking at the future of green and sustainable finance and also what it can contribute to the realisation of the UN Sustainable Development Goals. My name is Graham Burnside. I currently chair the advisory board of the Islamic Finance Council, and I was also one of the co-founders of the Global Ethical Finance Initiative. Well, I'm delighted to say that we have an excellent array of speakers for you today, not least our two keynote speakers in front of me here, Dr. Reza Bakir, the Governor of the State Bank of Pakistan, and Mr. Ivan McKee, the Scottish Government's Minister for Business, Trade, Tourism and Enterprise. I hope I haven't missed any of those out. So we'll be hearing from both of them very shortly, but I thought before we start, I might just say very briefly a little about the Islamic Finance Council UK, for those of you who don't already know us. We are a not-for-profit body with a focus on the promotion and enhancement of the Islamic finance industry worldwide. We are UK-based, as the name suggests, but our scope of operations is very much global. To give you some examples of some of the things we've achieved over recent years, that would include advising a number of countries worldwide on the development of their regulatory frameworks for Islamic finance. And we facilitated the first joint financial research project between Islamic and Christian faith leaders. Probably so our most significant recent project, and one which is definitely relevant to what we're here to talk about today, was the establishment in 2020, in collaboration with the UK government, of the Global Islamic Finance and SDGs Task Force. A bit of a mouthful, I appreciate. The task force has brought together over 50 leading Islamic finance practitioners from around the world to consider the alignment between Islamic finance and the UN SDGs, and also to explore the opportunities which this should offer to the OIC member states. The task force has gone on to establish various working groups, including one which is focused on Pakistan, which was established very much with the help and support of Governor Bakir, for which we are extremely grateful. So can I conclude just by thanking all of our speakers today, and indeed also yourselves, ladies and gentlemen, for taking the time to be with us this morning for what I hope will be a stimulating and interesting event for you all. So at this point, I'm going to hand over to Mustafa Adil, who is Head of Islamic Finance, Data and Analytics at the London Stock Exchange Group, and who is going to guide us through the rest of today's program. So over to you, Mustafa.
Thank you, Graham. Can you hear me? Yeah. Bismillahir Rahmanir Rahim. Alhamdulillahi Rabbil Alameen. Wassalatu wassalam ala Sayyidina wa Nabiyyina Muhammad wa ala alihi wa sahbihi ajmain. Your Excellencies, distinguished guests, ladies and gentlemen, Assalamu alaikum and good morning. It gives me great pleasure to welcome you all today to our event titled The Future of Green and Sustainable Finance, the Role of SDGs. As Graham mentioned, my name is Mustafa Adil. I'm the Head of Islamic Finance at the London Stock Exchange Group, and I will have the pleasure of being your MC for the day. We have a very, very packed agenda and some very, very esteemed speakers who will be talking about what is arguably the most important topic in the financial services industry today, and more broadly within broader government policy. And that is the development of sustainable finance and how that ties in with the Sustainable Development Goals. So we have an excellent lineup of speakers representing various different institutions that will be talking about key trends in green and sustainable finance. They will be talking about the role of the Sustainable Development Goals and how that connects with sustainable finance. And they'll also be reflecting and sharing their insights on how some recent events, more macro events like the COVID pandemic, and as we come through that, the current situation in Ukraine and others, what impact that has on the global drive towards achieving a more sustainable economy and a more sustainable ecosystem globally. We will start the day with a keynote address delivered by His Excellency Ivan McKee, the Minister for Business, Trade, Tourism and Enterprise from the Scottish Government, who will talk about the government approach to sustainable finance. We will then have the pleasure of inviting His Excellency Dr. Reza Bakir, the Governor of the State Bank of Pakistan, who will be delivering a keynote address and also launching the new SDG and sustainability report, Pakistan Banking Sector Perspectives. It is one of the first reports that looks at the Sustainable Development Goals from the point of view of the banking sector. And if you haven't received a copy, I highly encourage you to collect one. It's available outside where you registered and go through that. Some fascinating insights that can be derived and lessons that can be learned from the experience in Pakistan and some of the recommendations that various different financial services sectors around the world can adopt. We will then have both His Excellency the Minister and His Excellency the Governor participate in a fireside chat where Graham is going to press them on how you prioritize the SDGs to achieve sustainable finance. And then after that, we will have a panel session where we will have representatives from regulators, from banks, from investment banks, and from advisors to the financial services industry, each bringing their perspective on the opportunity, the challenges, and the way forward for incorporating ESG principles and SDGs into the financial services industry. So we have a packed session and we don't want to delay. I just want to start by reminding everybody to please keep your mobile phones on silent because we don't want to disturb the programs. And if you haven't received a copy of the report, you can collect one on your way out from the reception area. We will be having audience Q&A as well, but we will reserve that for the panel towards the end. So if you have any pertinent questions that come up during the course of the discussions, please do keep them in mind and you can ask them and we'll put them to our fellow panelists to answer and to provide their insights on your questions. So with that, it gives me great pleasure to invite His Excellency Ivan McKee, the Minister for Business, Trade, Tourism and Enterprise, to deliver his keynote address.
Thank you very much. Good morning, Assalamu alaikum, and it's great to be here. And thank you very much for the invitation from Jeffrey from the Global Ethical Finance Initiative for inviting me here today. And this is an organisation I've watched develop over the last 4 years. And it's been remarkable how they've stepped into this space, based in Scotland, but really leading on the global stage in terms of taking forward the Ethical Finance Initiative. And I think today is another milestone in that development. I'm primarily here in the UAE this week to lead Scotland's presence at Expo 2020 and participate in a whole range of events at Expo Fringe. Scotland's already delivered significant events over the course of Expo in areas of space, digital, healthcare, and the focus for this week, which is the transition to net zero. And Expo has been a fabulous platform for Scottish innovation across these sectors, spotlighting our global ambitions for Scotland as an attractive place to do business, trade, and investment. And my aim today is to promote Scotland as a global leader in ethical finance, ensuring that the business we do also aligns with our core values for a greener, more prosperous economy, and that we collaborate and build very important relationships with like-minded partners globally. And I'm delighted to be able to take forward that agenda at this event this morning. You've already seen from the short video the position that Scotland enjoys, leading in many of the technologies of the future as we transition to a sustainable net zero world. And we are delighted to be able to take that agenda forward with our global partners. Scotland is very proud that since 2008, we have decarbonised faster than any other G20 country. But to ensure that we can achieve our world-leading climate change targets and a just transition to net zero economy by 2045, we must bring together the private and public sectors to work together for the common good. And to do that, we need technology and finance, and they both need to be deployed at scale. And that's why this event and Scottish organisations such as the Global Ethical Finance Initiative and Greenbackers, a climate tech company that I'm speaking at their event later on this morning, are so important in helping bringing these vital components together: green technology and green sustainable finance. The Scottish Government's National Performance Framework sets our vision for national wellbeing and an overriding aim to ensure that our national outcomes support our purpose and the measures needed to capture our progress towards these outcomes. Our 2018 review of this framework identified a set of national outcomes that even better reflects the values we hold and improves that very important alignment with the United Nations Sustainable Development Goals. And through this, we have national outcomes that deliver for both the environment and for our economy, which of course is the key focus areas for today's events. In Scotland, we see sustainable finance as a fantastic economic opportunity that we must grasp. Scotland already, of course, has outstanding natural assets and a status as the UK's second largest financial centre. We need to build on this and the potential long-term relationships with investors, regulators, and the wider industry to continue to lead the world in the areas of green, ethical, and sustainable financial services. And to do this, we must seek out new opportunities to diversify our financial services industry so that the industry can continue to prosper and grow. So I'm absolutely delighted with the establishment of our new Green and Sustainable Financial Services Task Force. And I know that Jeffy, our host today, as Secretariat of that task force, have been leading in the setup of this industry-led initiative, and I thank them for their continued work in this regard. It's crucial that we build up on the existing activity within Scotland, so the task force ambition and mission is remarkably simple: to set out the actions Scotland must take to finance a just transition at home and building on our existing strengths as a leading European financial hub, and to leverage that domestic leadership in pursuit of high growth, new export-orientated jobs in a greener, more sustainable and ethical financial services sector. Scotland's financial services industry must continue to play a major role in the delivery of the UK's wider net zero targets, and we continue to press the UK for global action to help build those international standards. Using our leading commercial and policy expertise, we will continue to reaffirm Scotland as a great place for green and sustainable investment. We'll continue to look internationally to build alliances and partnerships so that we can collectively tackle the challenges we all face. As you know, we welcomed COP26 to Glasgow only a few months ago. And while there was real progress made there is still a huge amount of work to be done to get to a 1.5 degrees, and we remain committed to reaching those goals. And our challenge now is to build on the commitments from COP26 to ensure Scotland is seen as a leading competitor in green and sustainable finance. COP26, of course, was a great opportunity to showcase Scotland's strengths in areas of economic opportunity presented by that just transition, and we'll use that to support delivery of our national strategy for economic transformation. This 10-year strategy to transform our economy to meet our net zero and just transition goals. And I look forward to seeing the outcome of future COPs in Egypt later this year, and of course in the UAE for COP28. Last year, Scotland also produced our Global Capital Investment Plan, which seeks to achieve alignment between Scotland's investment needs and the supply of internationally mobile capital. Net zero is at the heart of our Global Capital Investment Plan, and we aim to create a launchpad to attract high levels of private investment. We will also expand our green investment portfolio to bring together projects worth £3 billion in 2022. The current portfolio covers sectors from environmentally sustainable commercial real estate to low emissions transportation and green energy. In expanding this portfolio, we are presenting new projects which demonstrate that Scotland is a world leader in future and innovative green industries. We will also provide investors with the confidence they need to back credible and sustainable projects in Scotland, promoting the range of opportunities within the portfolio, and that plays a key role delivering on our global capital investment plan and attracting and retaining capital investment flows into priority areas of Scotland's economy. We all stand at a crucial moment in trying to limit climate change, and it's vital that we transform the entire financial system's needs into one that prioritises the environment and locks financial flows irreversibly into a pathway to net zero. That's why Scotland has made green finance a priority, using Scotland's track record of leadership to inspire and drive progress, not just in Scotland, but globally. I'd like to thank once again our host, Jeffy, for this event and the opportunity to engage with fellow panel members and audiences. And I'm very much looking forward to the remarks from my colleague, the Governor of the State Bank of Pakistan, and to the Fireside Chat we shall have later. And then I have to apologise because I have to leave for other events at Expo, but I'm sure you will have a very illuminating and fascinating and productive panel discussion later on. Thank you very much for your time.
Thank you, Your Excellency, for that very insightful keynote. And there is no question that Scotland is a global leader when it comes to the global drive towards achieving a net zero world. And it was fascinating to hear about many of the different initiatives that Scotland is leading on, particularly those that are directly linked to the financial services sector. Thank you for that. And ladies and gentlemen, it now gives me great pleasure to invite His Excellency, Dr. Raza Bakir, the Governor of the State Bank of Pakistan, to deliver his keynote address and officially launch the SDG and Sustainability report. Thank you.
Bismillah ar-Rahman ar-Rahim. The Honourable Minister from Scotland, Graham, our Deputy Governor, Seema Kamil, who's come with me from Karachi to be here with you. Ladies and gentlemen, a very, very good morning to you. Assalamu alaikum. It's a real pleasure to be with all of you here today. Let me just begin, first of all, by thanking Graham, by thanking Fahim, by thanking many others who have been involved in this work, especially on creating the Global Task Force. I think initiatives such as these, where people who are motivated by what is ultimately important for the world, combining important strands of Islamic finance as well as the imperatives of sustainable development goals, when you come together like this and you create such global task forces, it gives central banks like ourselves an opportunity to also be a part of that journey. And Graham, you mentioned the working group that was created in Pakistan, one of the first. We are very proud that we stepped up to create a working group. We are extremely delighted that today we are launching this report on the role of the Pakistani banking sector in promoting SDGs. And I want to really acknowledge and thank my colleagues here from the central bank, GM Abbasi and Samar Hasnan, who were inspired by the work that the Global Task Force has been doing. And I want to assure you right at the beginning, and a message from the very top of the central bank, that as an institution, we remain committed to promoting the work that we can do in our domain towards SDGs, how we can get our banks to promote that cause, and further, how we can get Islamic finance to promote that cause as well. And before I end, as the chairman of the IFSB right now, I'll say a few words also about the role that Islamic finance can play towards these goals. So I want to first give you some background about how this report came about. This was back in 2020 when this working group was launched, and it consisted of representatives from banks, from UK IFC, and from the State Bank of Pakistan. And one of the key objectives of this working group was to put together a report that is in front of you, taking stock of where do banks stand in terms of the agenda on sustainable development goals. I really urge you to take a look at it, and in particular, to look at the survey results, because as part of this report, we surveyed bank officers about their awareness of sustainable development goals and the feedback that they had about their perceived commitment from their bosses, whether in management or in the board of directors, towards SDGs and what role can banks play. And it has some eliminating findings. It also has an action plan. But before I come to the action plan, I want to share with you some of the challenges that were identified as part of this work. Had this working group not been formed, and had this survey not been done, we would not have this good information on the challenges that currently exist. So what are some of the challenges that commercial bank employees in Pakistan have themselves shared about the agenda towards achieving sustainable development goals? First, this is a perceived lack of support and commitment from board of directors and executive management of financial institutions. This is good information, so we know who to target. We need to start from the boards of these banks. Second, lack of the inability of financial institutions to fully translate SDGs into implementable plans. Even where there was awareness about SDGs, there was very little by way of implementable plan that those institutions had. A lack of awareness and serious capacity building constraints of bank staff on SDGs. Commercial bankers need to be trained and we need to build their capacity. So what transpired was really a need for action in several different areas, including building a capacity. And I'll talk a little bit more about that when I talk about the action plan that was developed in this report. Now, as I mentioned at the beginning, we are very proud, delighted that we are launching this report and are standing next to you in this good cause. But instead of now going more into what the findings of the report was, I want to take a step back and, as a second part of my remarks, talk a little bit about what is the State Bank of Pakistan doing about sustainable development goals. And I want to begin by not taking for granted why I'm here. I am, after all, a central banker. And central bankers, in the traditional and conservative interpretation, are focused on monetary policy to control inflation. They're focused on regulating banks so that if the public puts its deposits in a bank, they feel safe, that they can withdraw at will. And they oversee the payment system. Nowhere in this traditional interpretation of what a central bank should do is the mention of SDGs. And it is important to recognize that central banks and governments have their respective spaces to work in. And it is a key responsibility of governments as well to work towards sustainable development goals. I'm mentioning these to you because it is important to begin by asking, what is the right mandate of central banks? Should central banks be in this space, or should they be in the traditional space of the three areas that I mentioned: monetary and financial stability and overseeing the payment system? There is an active debate on this topic around the world. You can look at the US. There is a very strong pushback from certain quarters in the US about the recent initiatives of the Federal Reserve Bank towards green banking, towards environmental issues in banking. We have to acknowledge it is an issue. I want to share where the state bank is in this issue, because different central banks can choose different approaches. And for us, it is very clear that particularly in emerging markets, central banking, like other public sector activities, is a means to an end. And we must not lose sight of that. And that ultimate end for the Central Bank of Pakistan is a prosperous, a sustainable, and an equitable living standard for our citizens. And when there are questions of trade-offs, I think for us, we go back to what is our ultimate objective towards these. In this context, while as a central bank, we do not compromise at all our primary goals of price stability, of financial stability, as well as of promoting growth, we place a great deal of emphasis on SDGs. And it is primarily from this perspective of what is the ultimate goal that a public sector institution should strive for. We do not see a trade-off between what I described as the core set of mandate and areas in the Sustainable Development Goals. Furthermore, I believe that central banks can be very powerful actors to prompt action on these fronts. And there is a key reason why. Central banks, because of their close relationship with commercial banks, can unlock liquidity and finance, can create the rules of the game in the financial sector through their regulations, whereby with a stroke of the pen and without compromising areas such as price and financial stability, they can prompt banks to further cater towards achieving sustainable development goals. And this is not just a hypothetical point that I'm mentioning. I want to share with you 3 concrete actions that the State Bank of Pakistan has taken that will help towards these sustainable development goals without compromising our core mandates, to illustrate our vision and to drive home the point that we don't see the trade-off between the 2 sets of mandates or objectives that I mentioned. First, gender. One of the key themes running through Sustainable Development Goals is to reduce the gender gap in general, but for a central bank to reduce the gender gap in financial inclusion. The Central Bank of Pakistan is, I think, amongst very, very few central banks that has launched a dedicated policy called Banking on Equality, with banking on equality having a double meaning, as in we want more women to bank. And Pakistan is a country where the statistics on the gender balance show that there is a long way to go. So we have used our regulatory space, which is the financial institutions that we oversee, to establish certain targets. And one of those targets is that by 2024, 20% of all employees of the financial institutions that we regulate, and for the State Bank itself, 20%, at least 20%, will have to be women. Second, within the central bank, as well as in commercial banks, the need to ensure that women employees have adequate leadership and mentoring opportunities, that they get to have mentors, so that this goal, which is a minimum, is not just a goal that is being fulfilled at lower tiers of the corporate ladder, but one which goes all the way through the hierarchy. There is the requirement for banks to create gender intentional products and to have better gender diversity on customer touchpoints. Now, there are many things in this strategy called Banking on Equality, and I encourage you to visit our website to look at it, because it is Exhibit A in our goal of doing our part towards SDGs. A second key point that I want to mention is the environment. What is the Central Bank of Pakistan doing for environment specifically, using the tools that it has that other public sector institutions don't have? But central banks are unique in one way. They have one power that no other institution in the country has, irrespective of the country that you're talking about. And that is the power to create money. Unlike commercial banks, central banks create money simply by crediting the account of a commercial bank. We have been using this power for a financing scheme for green energy, where we lend to a commercial bank and we tell our commercial banks, here is a total envelope of resources that we will give to you, which you in turn can lend to the private sector for green energy, whether it's solar, whether it's wind, whether it's water, but green. You as the bank will determine whether the project is viable and whether you think you will be repaid in full and on time. But should you decide to go ahead, and I guarantee you there has been overwhelming demand in this initiative, you don't need to mobilize funding elsewhere. We as the central bank will give you concessional finance. During COVID, the term quantitative easing became very fashionable, where central banks were essentially printing money and central banks were buying government debt. In the State Bank of Pakistan, we have not been buying government debt in primary auctions, but we have used quantitative easing for very targeted support. This way of supporting green is for us very appropriate because it's very targeted. The bank, as a regulated institution, has to ensure that the money that it is lending is for these green purposes. Otherwise, they don't get the money. And if we have to give concessional finance, this is a good cause for us to give. And this has supported, since this program started, tens of billions of rupees of investment in solar and other green energy. So, and this is exhibit B of some of the specific actions that we have taken. My last example is the goal of addressing wealth inequality, particularly in countries, in developing countries. Wealth inequality is very pronounced, especially because of the disparity in the ownership of real assets, and in particular, housing. It's a very, very, very tiny fraction of Pakistanis who own their own house. And if you don't own your own house, you don't have collateral to access the financial system often, where you can then even decide to start a small business. What this means is that if the situation just continues the way it is, some, and the most, will never, ever be able to compete on an equal footing with others. So my third example is of a very concrete intervention that the Central Bank of Pakistan has been doing, working with the government to get banks to provide mortgages for low-income people. And the way this is targeted is that the only way the bank qualifies for this subsidy on the interest, as well as principal insurance and risk coverage, is if the house that is being bought is smaller than a certain square footage. And this is self-selection, because we know that rich people will never live in small houses. There's no cap on the price of the land or the house. There is only a cap on the size. And as long as the bank is lending to us, they're going to get cheap money for these mortgages, which are fixed. And we went further and we had targets for banks. I myself have chaired 45 meetings of a steering committee that I lead with the heads of many commercial banks that is designed to promote affordable housing. Our Deputy Governor, Seema Kamil, has been leading this initiative in the central bank together with Suman. These are three examples of what I wanted to mention about the role of central banks and how for Pakistan and for the Pakistani central bank, not only do we not see a trade-off, but we are embracing the goal of the spirit of sustainable development goals. I will skip what I wanted to say regarding the action plan because I have overstepped, I think, the time that was allocated to me. But I do want to just mention very quickly, as the Pakistan right now has the chairmanship of the Islamic Financial Services Board. And I do not have as much space here to talk about the work that the IFSB has been doing in the spirit of sustainable development goals. But I want to tell you that as the chairman of the IFSB for this year, my team and I, we are very much looking forward to continuing to push the agenda that the IFSB already has on using Islamic finance towards achieving SDGs. So at the end, let me say one thing. I shared with you examples of this particular report on sustainable development goals and what the Pakistan banking sector can do. I shared with you 3 specific examples. This is not an exhaustive list. There are many other areas of how the Central Bank of Pakistan is using its tools under its mandate to promote SDGs. But the biggest point I want to leave with you is that I'm here with you today, together with our Deputy Governor and 2 of our senior officers, to drive home the point that we are your partners in the work that the Global Task Force is doing in this good cause. Ladies and gentlemen, thank you very much for your time.
Thank you very much, Your Excellency, for a very, very interesting, insightful speech, not only talking about the key outcomes of the report, but reflecting and providing context as to the role the central bank can play in driving policy forward and sharing 3 fantastic examples of practical initiatives that can be used to help improve different areas of the SDGs. Thank you very much. With that, ladies and gentlemen, we'll move to the Fireside Chat, and it will give me great pleasure to invite His Excellency Ivan McKee and His Excellency Dr. Reza Bakir to the stage, along with Graham, who will be the moderator for the chat.
Well, thank you both very much. Can everyone hear me? Thank you both very much for your contribution so far. We're probably compressed a bit the time for this discussion, but I think the insights we've had from both, thank you. The insights we've had from both of you are such that we've already covered some of the ground that I would have been touching on in this discussion. So it's certainly not a loss of time. But we hopefully have time for at least one topic to discuss. And I'd really like to just move forward again on the SDGs to begin with, that both of you have already touched on, obviously, in some detail, and which are at the core of what we're talking about here. It's worth perhaps just mentioning that both of the countries represented have been in it to a degree pioneers in the field. Pakistan has been one of the first countries to adopt the 2030 implementation agenda for the SDGs, and Scotland having, I think, perhaps uniquely integrated its the relevant SDGs with its agenda for government, which is the National Performance Framework, as it's called. So clearly, these are, from your different perspectives, both at the core of what you're engaged with. But it is conspicuously clear that very large sums of money are going to be required if indeed that agenda is to be met. And much of this is going to have to come from the private finance and investment world. So I'd just like to hear from both of your perspectives as how you see that the private investment world should be moving forward and what they should be doing about it.
Yeah, thank you. So thank you, Graham, great question. And you're right, we've integrated the SDGs into our national performance framework, which guides all of our government policy, and that's hugely important. The role of private finance is absolutely critical. It became, I think, my biggest takeaway from COP26 in Glasgow, where I met with many businesses and investors, was that there is a huge willingness to invest money in that sustainability and the transition to net zero, but there's also a lot of uncertainty about how best to do that. So I think the first thing to say is there is a tremendous amount of capital out there, both from a capital investment point of view, but also very large global businesses who know that they need to invest in a new direction, but they're not quite sure where to invest. That's the first thing. The second thing is that huge amounts of capital are required, and the numbers are just staggering. In our context, it runs into, for a small country like Scotland, tens of billions over the coming years. So clearly the public sector is not in a position to do that itself, and we absolutely recognise that. So then it comes down to how do you align what needs to be done? How do you give private investors the confidence that they are doing the right thing, and it's also going to return the investment returns that they require? And I think government's got a huge role there by being an active player on the field of play, engaging with the private sector investors, understanding the very different risk reward profiles that are out there. Venture capital has got a very different risk reward profile from sovereign wealth and so on and so forth. So understanding what that market looks like, understanding what it is we've got to offer, and being very clear about what we're good at. In the case of Scotland, we understand the technologies we're good at, the investment opportunities we have, what they're going to deliver. Been very clear about the frameworks within which that operates, so that businesses understand that what they're investing in is taking us on that journey. And also, very importantly, for example, through our Scottish National Investment Bank, through the investments that Scottish Enterprise and others makes to put public money in to partner with and leverage up much more significant amounts of private money through cornerstoning or partner investing. And I think that having that skin in the game gives private sector investors the confidence to be able to make the significant investments they need to make. So it's not an easy journey, but I think it's a journey where we've got clarity on how we approach it. We're at the beginning of that journey, and we're very keen to partner with others that have a similar approach.
Thank you. Governor.
Yeah, so let me first acknowledge that this is a very big challenge for Pakistan and for many developing countries as well. And just to put some figures, it is estimated that Pakistan would require an additional 16% of GDP by 2030 from both the public and the private sector to achieve SDGs in critical sectors, 16% of GDP. Our tax to GDP ratio right now is 11% of GDP, and our current investment to GDP ratio is around 15%. So this would essentially mean doubling the investment ratio of Pakistan. And the question becomes, where do we generate this magnitude of financing that is needed? Before talking of a couple of general points, I want to give some specific examples where both the public sector and the private sector has been making some efforts towards raising financing towards SDGs. Our Water and Power Development Authority, WAPDA, recently issued a $500 million green bond, which is a bond, just a sovereign bond, that is going to be used for money for clean energy using hydropower. We have another initiative from the private sector, which is a social impact bond issued by EU Microfinance Bank. This is the first social impact bond of 3.5 billion rupees. And the proceeds of this bond will be used towards financing renewable energy private school loans, low-cost housing, and SMEs, primarily in rural Pakistan. So these are a couple of examples, but $500 million on the one hand, and then 3.5 billion rupees, given the goal that we have, is a drop in the bucket. We will continue with all of these initiatives, but I do feel now as a policymaker and as a central banker who has had to work in a team of the government to steer the economy out of the COVID crisis, the setback that emerging markets like Pakistan have suffered because of the challenges posed by COVID. The UN report had already shown that the world as a whole is falling behind on SDGs. This is before COVID. And then comes COVID. And the amount of resources that had to be devoted just to prevent a complete collapse in the world's fifth largest country. And then on top of that, as the world recovered, and particularly demand in advanced economies recovered, the rapid increase in commodity prices, and now the Russia-Ukraine conflict that has driven up the cost of borrowing for emerging markets. It has been one blow after another. And as a central banker for the past 3 years, dealing with these blows has just made it harder and harder for us to contemplate how are we going to raise the kind of resources in international markets. It's an area where I think international institutions need to step up, and they need to identify a way in which, for countries like Pakistan, where the goals of SDGs are facing further challenges because international capital markets are closing on them for reasons not having to do with them. COVID was an exogenous shock. The increase in global commodity prices is an exogenous shock. The Russia-Ukraine conflict is an exogenous shock for a country like Pakistan. None of these has anything to do with anything that Pakistan may have done. But what is the consequence? Oil that we import, which is 1/3 of our total import basket, has more than doubled, which means that our current account deficits are rising. Private capital markets have closed towards practically all high debt emerging markets. Pakistan is one of the only countries that actually reduced its public debt to GDP ratio during COVID, but still having a considerable debt to GDP ratio means that because of this very fragile global investor sentiment, capital markets are. So where is that 15% of GDP going to come from? And what is the role of the international financial institutions to help emerging markets which have been bystanders, but have really suffered from these series of exogenous shocks? I think is a question that needs to be put on the agenda of international financial institutions. Thank you.
Thank you very much. I think you've touched on a lot of very strong, relevant points that it takes me on to. I think we've time to just have a very, your mind is a bit looking nervous. Just before we let you go, just as a sort of follow on from that and the point you've just touched on with the pressures that COVID and now the war in Ukraine is causing. How do you see the imperatives that have come out of COP26 and where the investment industry needs to be focusing on specifically to advance the agenda from that and the Glasgow Climate Pact, etc., that emerged? Is that still a realistic prospect, or are these events making this proceed further?
I think, to be honest, it will depend where you're looking at this from, and it's very illuminating to hear from the government about the challenges facing Pakistan and developing economies, which have been obviously compounded by recent events. But I still believe that the intent is there very strongly from investors, not least because it's not just because it's the right thing to do in the medium and long term. It's also because there's a very strong recognition for lots of reasons that is the direction of travel. And if you're looking for sustainable investment, never mind just purely financial terms, that positioning has to evolve and change. So I think that recognition is there. And to be honest, the tragic events in Ukraine have placed further compounding shocks onto the global financial system as a consequence of commodity prices and so on. But they've also, I think, highlighted, and this is our perspective on it, we need to accelerate that transition to more resilient and secure energy sources that are renewable sources. So I think that imperative is absolutely still there. But I don't imagine or pretend that there aren't huge difficulties in the journey that we need to take. So at the start of that journey, we're very clear on where it needs to go. I think that, as I said, the money is there and the intent is there, but making sure it's got the right routes to those sustainable investments, I think, is the challenge that we face.
Let me first applaud the work that was done in Glasgow, and particularly the Glasgow Financial Alliance for Net Zero, and the commitments and the targets that have been established. And Pakistan, as I said at the very beginning, is very much a partner in these efforts, and we will do everything that we can towards these goals. I mentioned already some areas where our private sector is identifying ways of mobilizing financing towards achieving these goals. As a regulator, we will continue to do the regulatory changes, including green banking guideline changes that we are doing, so that we, at least at the level of the operation of our commercial banks, internalize the goals that have been established in the Glasgow Financial Alliance for Net Zero. But I want to go further, and I want to say that, look, I gave you an example where the Central Bank of Pakistan is giving concessional financing towards private sector projects for climate. And these projects, which the banks are financing, are profitable. They are not generating losses for banks. Banks are making money on them. So if a Central Bank of Pakistan can provide such concessional financing for such projects, I think it would be very, very useful to think about how international institutions could directly provide such funding towards private sector green climate projects. Where it would help us is that instead of generating rupee funding, which then means that it has to be converted to dollars to import a lot of the panels or other material, the international institutions would be lending in hard currency for such projects. And if already these private sector projects are very profitable, it should be a green light for international institutions to identify some way in which their investments are protected, as well as we promote the cause of climate. So again, I would encourage, I think, through the work of areas, institutions like the Global Task Force, to make awareness, a push, concrete ideas, concrete schemes for such hard currency financing, for green issues. Leave the government out of it. This can be directly to the private sector. We already have a private sector that is doing profitable investments. We need somehow to come together to get them to tap hard currency funding. Thank you.
Thank you both very much. And I think the joint point to be drawn there is that you know, wherever you are in the world, where everyone is facing very strong headwinds at the moment, but it's good to hear that there are still commitments and still reasons to be cheerful. So can I, on your behalf, ladies and gentlemen, thank very much the Governor and the Minister for taking their time today. It's extremely grateful you've been able to fit us into your timetables, which I know will be extremely busy, and hope the rest of your days go well.
Thank you. Thank you very much.
We will now move to the next session of the day, which is the panel session. And we are delighted to have with us representatives from various different stakeholders in the financial services industry, including representation from regulators, from the banking sector, and from advisors and consultants to the financial services sectors to talk about ESG investing and whether it is just virtue signaling or a real commercial opportunity. And with that, I would like to take the opportunity now to invite the panelists for the session. Mr. Syed Samar Hossain, the Executive Director for the State Bank of Pakistan. Mr. Christian Gokel, the Chief Risk Officer and Head of Research for Setco Capital. Mr. Khaldun Hajjaj, AME, Head of Government Affairs for Standard Chartered Bank. And Mr. Jonathan Hall, the Managing Director for RJ Fleming. Gentlemen, I believe the organizers are going to set up a few chairs as well as we go through this. Please. Thank you very much, gentlemen, for that. Very, very interesting day today. We had a number of topics and discussions, a number of insights that were shared by the speakers already. And we have a lot to get through, and unfortunately time is against us. So we will try to run through as fast as we can. And for the audience, I will keep time towards the end for audience Q&A. So please, if you have any questions, keep those in mind and we will put them towards our panelists. And I think, just coming off the conversation that we had with His Excellency, the Minister, His Excellency, the Governor, talking about the government drive. I think, I want to start, Syed, with yourself. And really, I want to put the question to you. The Central Bank of Pakistan has done this, groundbreaking research looking at, SDGs from the banking sector perspective. And I'm sure a lot of insights that came out, the government shared some of them. But really, I want to get your perspective on how the financial services industry, how the banks see this current drive towards ESG and sustainability, right? I mean, from our experience, some people consider it to be a CSR related activity. Some consider it to be a risk mitigation strategy. They look at it purely from a risk perspective. Some of them looking at it from a commercial opportunity perspective. I think the governor stressed the profitability of some of these initiatives that are there. So from your experience, how are the banks looking at this ESG focus in the market?
Thank you, Mustafa. And let me start with thanking to UKIFC for providing this opportunity. And I'll be very candid in responding to your question, So from the central bank's point of view, whether banks are viewing it as ESG, a risk mitigation, or a commercial opportunity, I'll be candid, With the start of their need, it was neither of any one of these. It was basically a push from the central bank to get into this field, I'll be very candid, Even if you look at the history of financing to ESG, ESG has never been the mainstream, agenda. People were, even within the ESG, people were just talking about the E. S was never there, It came quite late. But when over a period of time, it has been proven that the project with the element of ESG are far better compared to the other projects. So then the landscape changed. When the central banks believe that this is the right thing to do, they had to convince the banks, and that is exactly the thing that we did in Pakistan. In 2017, we introduced green banking guidelines. So that was the first step, in conjunction with the government of Pakistan's adopting this Agenda 2030. But when we introduced those guidelines, then the banks started traveling on that, So the answer to your question is, it's basically the push from the central bank in the first instance to move toward that, path. But then subsequently, of course, the bank came. And now, if you ask me, as a candid view, it's purely a commercial, sense in this whole transaction. It's neither a CSR. Fine, banks will do the risk mitigation in any case, in any transaction. But now there is a commercial opportunity.
That's very interesting. And I think that experience has been reflected in many areas where it is either a government-led or central bank-led initiative to start with, and then once the banks see the opportunity, that is when they come on board. Christian, I think staying with that, I want to come to you. We know that SETCO has been, in terms of regional players, one of the early adopters and pushers of ESG-related activity, of sustainable finance-related activity. From many years back, and from a SETCO perspective, what was the motivator? Is it a purpose-driven initiative? Is it a pure profitability initiative? Is it a commercial opportunity? How do you see this? And you adopted this before there was a central bank push or a government push in the region for that. So how did you identify the opportunity and lead on that? What drove there?
Yeah, thanks, Mustafa. And first of all, thank you very much for inviting me to this esteemed conference and panel. From our perspective, it's actually, say, not mutually exclusive. That's either or sustainability or profitability. And so, I mean, these concepts complement each other very well. And ultimately, we have a fiduciary responsibility towards our investors and, of course, responsibility towards other stakeholder groups. I mean, we come from a Sharia compliant background. I mean, that was where the organization started, and also the predecessor organization which was a family office. But we became in 2014 the first signatory as a Sharia compliant investor of the UNPRI, and we were also the first Saudi Arabia based asset manager to be a signatory of UNPRI. And for us it was a natural transition, actually, because the two concepts, Sharia compliance and responsible investment, naturally align. I mean, they are both ethical in nature. They are seeking to improve the well-being of society, prevent injustice in trade relations, and I mean, it's very well integrating with each other. So we have defined a concept called Pruned ethical investing, which is the integration of responsible investment and Sharia compliant investing. I mean, the common denominator of both concepts is in the exclusion of certain sectors, like the sin sectors, like the exclusion of tobacco, weapons, alcohol. And so that's also where most responsible investors traditionally started from. And then, I mean, the two concepts actually add both value to each other. So from a responsible investment perspective, we have the ESG integration, which adds value. The ESG, I mean, that's very well proven in academic research. I mean, companies that are leading in ESG, they tend to reduce risk. They tend to have a better reputation. They also have competitive advantages. So it's linked to investment returns. And from a Sharia perspective, we have the balance sheet screens. Of course, for example, leverage constraints, which removes financial sector, for example. We have shown in some research that we have also published that this can reduce it can bias investment portfolios towards certain factors, for example, growth and quality, and these have positive risk return expectations. So in that sense, I mean, it makes a lot of sense for our investors. I mean, it adds value in terms of investment performance, risk reduction, and we show that, or we see that in our investment products and live track records. All our investment products follow responsible investment approaches. So there's at the basis Sharia compliant with negative screens. Then we have ESG integration, active ownership, and also thematic and impact investments. And in that sense, when we compare, for example, we have two public equity products managed by external managers who also manage conventional funds of the same strategy. And there we see really very well the like-for-like comparison, the incremental benefit of the ESG integration adds incremental performance, and also the Sharia integration that adds incremental performance. So that is, I think, a very strong investment case for our investors. Also, in terms of impact investment, we have done investments to address the SDGs, like, for example, as a build-to-suit real estate investment, we did a school in Jeddah, constructing that school building, and also in that sense, building social infrastructure. And yeah, I mean, the school building is very energy efficient, LEED certified, and we believe that the Saudi real estate market will essentially transition into the direction that we see in Europe and US, where, I mean, the energy efficiency is actually the prerequisite for deal making and transactions.
No, that's very, very interesting. And I can clearly see that, you know, these considerations have been aligned across the board with many of the different portfolios. And I remember reading, I believe it was maybe 6 or 7 or 8 years ago, the concept of prudent investing that SETCO was promoting, where you have the alignment between Sharia compliance and ESGs in terms of all the negative sectors that are removed. And if you add a component of not having over-leveraged companies and looking at the balance sheet, that there was a very strong convergence with Islamic finance principles as well, which was fascinating. I'll come back to you because I have a couple of questions, but I want to bring the other panelists into the conversation. Khaldun, I want to come to you, and obviously, you know, as you know, Standard Chartered Bank, you know, the commitment from Standard Chartered towards sustainable finance is very well known and very well documented, right? And there's no question that from a leadership perspective, there is a drive towards adopting, but obviously operating in developing countries and emerging markets has its own operational challenges that exist there, right? Whether it's disclosures, whether it's regulations, whether it's, you know, awareness, whatever they may be. From your perspective, you know, how does your institution look at overcoming some of these challenges that exist when you want to roll out and enhance sustainable finance within emerging and developing markets?
Yeah, thank you very much. Excellent question, actually. I think the first point that needs to be clarified is that this challenge of identifying what is sustainable finance and what is green and what isn't just an emerging market challenge. It's equally challenging in advanced markets. And if you look at the global map outside of the sort of the EU, UK, maybe Chile as well, there's in parts of Asia, there's very little actually to point to sort of some kind of advanced settings that would drive ESG-based sustainable finance investment. So the entire globe lags behind in that front, and certainly I think there is an enormous push currently to move towards creating the enabling environment, putting in place the key pillars that would provide certitude that something is in fact sustainable, but we're still a long way off. And to this extent, quite often, you know, we look to government for leadership on this, and this is the question you're going to hint to me. I know that we look for government for leadership, and government, of course, is central to creating the enabling environment and the conditions to generate sustainable outcomes. Nevertheless, if you look at government, it's in the business of politics, and politics obviously generates all sorts of outcomes, some of which may not be the most desirable. And to this extent, it's quite interesting. 3 weeks ago in Cairo, we met with Presidential Envoy John Kerry, the former Secretary, the former Secretary of State, and we asked him directly, how can we take the assurances of the US government, for example, seriously, that they will push forward and push ahead to create the enabling environment for long-term sustainable investment policies, given that it seems that politics very much drove, for example, the push towards net zero and the Paris targets under the last administration. And his response was actually sort of quite important. And then he said, well, government is important, but in essence, it's becoming more and more marginal to what happens in sustainability policy by virtue of the fact that the private sector has now moved on. It's no longer a debate. Sustainability, environmental, social, and governance is no longer a factor, as Said said, of corporate social responsibility or risk management. It's become core to business, and it's become core to the business of corporates like us, but indeed, it's also core to the business of government. And if anything, though, government is in fact lagging behind in this particular space. Nevertheless, I think we are seeing significant growth and positive movement. I note that this year we estimate, Standard Chartered Research estimates that the total quantum of issuances that are ESG related will be around 1.7 billion, which is a 50% rise on last year. Now, obviously, we live in very unusual circumstances, but nevertheless, it is a big jump, and it's essentially from the global quantum, it's moved from 11 to 18%. Now, some governments, obviously the UK and some governments in Europe are in fact issuing significant numbers in raw numbers, but overall, it's actually quite limited. So we need to move in order to really center ESG and the SDGs in particular. We need to create an environment whereby the private sector in particular, and that includes us, stops looking at ESG as a kind of empirical risk management strategy, and rather start thinking of it as a rational approach to actually centering positive outcomes at the core of business.
No, thank you very much, and that's quite an insightful approach to this. And I think Jonathan, that segues into you quite well, because you obviously have a very unique perspective on this area. When we look at leadership and who's driving the leadership, Sayed mentioned that in Pakistan, for example, it was a central bank led, and then the commercial opportunity came through, and Khaldun is now saying that it is the private sector is the one that is going to have to drive it going forward. Do you see the leadership for the drive towards sustainable finance shifting from governments to the private sector? And does the private sector have the enabling environment to be able to take that forward?
Look, it is very positive to hear all of these initiatives, and I think it is beginning to change, and I think we all get the sense that it is. I mean, I think still to the extent that governments have to provide concessionary financing for projects to happen. Positive correlations between undertaking these sustainable actions and the financial outcome related matters. There's a slightly more cynical view of performance. That side is it can be box ticking from both sides. I mean, we've had certainly the experience where during the investment process, whether it's limited partners or it's direct investors, some who have been some of the major development agencies, there's a lot of effort during the sort of investment process, shareholder agreement negotiation, that you must report this, you must report that, we want quarterly reports for this, annual reports on everything that you've been doing within the company and outcomes, and then you hire a consultant, they produce the report, it's 50 pages, you send it off to the investor, and you never hear anything. Whether it's good or whether it's bad, it's like fine. I mean, I've done my bit. If you're not held to account, what's the point if it just goes nowhere? So I think that the more people are held to account, and I know we're seeing now a lot more on that. I mean, I'm talking more at the private market side, but obviously in the public market side now we see the SEC and so on now all increasing disclosure requirements and so on. But I think we have to try and avoid this becoming you know, another compliance item where it's, you know, you're proving annually that you haven't done negative things rather than, you know, you're demonstrating against some sort of benchmark that you've generated more of a positive outcome. You know, but I think, you know, all of these initiatives, everything that's going on, you know, clearly, you know, there is a wave, you know, coming along those lines, and you know, on the sort of cynical commercial opportunity. I mean, private fund managers, investors, you know, we are going to offer investors what they want. So if people want to see more ESG related investment, then, you know, I think that is what's going to happen.
Interesting. So from that perspective, just before I move on, in your view, who would be the most significant stakeholder that can really drive the needle when it comes to sustainable finance? Is it going to be investors, as you mentioned, and once investors start holding institutions to account, that needle is going to shift? Is it going to be the private sector or the financing sector, or will it be still government that will take us from where we are now to forward?
No, I think ultimately it has to be the investment, you know, the investment market more generally. I think, you know, governments can set the frameworks, they can set regulations, they can support it to a certain extent. But I think, you know, once business and investors can genuinely see that you can generate market or, you know, market plus returns, you know, I mean, that, you know, we see business models evolving, developing, you know, all of this coming through. So I think only once it becomes, you know, commercially viable, you know, will it really get to the scale that we all need to. I think that's just the reality.
Sure. I think I've touched the point with all the panelists, so they'd all like to chime in. Please, we'll start with Khuldoon and work our way down here.
Again, this is an incredibly central point to the discussion, and really where it starts and where it ends and who empowers who is a discussion that's been ongoing now since the mid-1980s. And in essence, what we have is a policy-making continuum that essentially started with really grassroots activism, okay, that has driven awareness, particularly in more advanced economies, that has driven awareness of the importance of sustainability in all of its forms, not just environmental sustainability, but social sustainability, governance sustainability. And that has cascaded through all the way to Wall Street. In essence, it's taken a very, very long time to actually get there. But nevertheless, what we see is essentially a push and pull model whereby you start off with the community who are demanding, who are making demands for greater sustainable considerations into the way we live our overall life, and then subsequently that inspires and drives the political class, which then pushes I guess the commercial, corporate, business side, and that's the actual continuum. Now we've reached a situation whereby the system has evolved so much that the most outspoken supporters of ESG are now the captains of industry. And that's actually really, really important, because the reality is that, let's say, if you run a chemical company, it is in your absolute interest to be more sustainable, especially given the cost of inputs. It's skyrocketing. But also from a government perspective, you have an enormous levers, both in terms of fiscal policy and monetary policy, which can drive behavior, and most importantly, at a consumer level, which determines the overall flow that society actually pushes and moves in.
Very interesting point, actually, and I like how you describe the evolution from a grassroots movement trickling up all the way to, you know, where, as you mentioned, the captains of industry now are the most vocal champions of sustainability, which is a tremendous shift from what was there a decade or 2 decades ago.
BlackRock, for example, absolutely is essential to this. And also, I think you could never underestimate the role of pension funds, particularly in developed markets, particularly given that the composition and what is considered to be fiduciary for them differs from more commercial fund managers, especially given that, you know, the average pension fund in more developed settings usually has representations from across community sectors, including worker representation.
There are very good examples actually how ESG is watered down. I mean, for example, say ETFs on S&P 500 driven by investor demand for ESG products. When you compare the ESG ETF to the S&P 500, say some have worse disclosure score than the original benchmark. Some have actually higher exposure to controversial weapons than the original benchmark. I mean, there's a lot of misuse and watering down of the commercial opportunity.
Yeah, and I think that's one of the biggest challenges as well, where we talk about this, just value signaling or greenwashing or whatever is being done to just wrap around. And maybe that's one of the areas where lack of global standardization means that people can define ESG on their own terms, and it can be quite drastically different from some of the other or what people would expect or what investors would expect. Sayed, I want to bring you in, and obviously you've heard you've patiently heard them talk about that leadership role, and obviously coming from a regulator perspective, I'm sure you have your own insights on that.
Yeah, thank you, Mustafa. Actually, I wanted to jump into this discussion because we know that there are too many stakeholders. And actually, no one can take a lead in that. I'll be very candid. And then there is a solution to that. And solution we have exercised that in case of Pakistan, in other areas. Can we think of sort of forming a council, committee at the top level in the country? Because there's so many stakeholders that if you want to assign lead to anyone, it will never work, unless you have a council. And that is something that we did in case of the gender policy that the governor was referring this morning, we did in case of financial inclusion. We've got a strategy, and then there's a council that supervises this whole process and has got the stakeholders, be it the government directly, or the central bank, or the banks, or the private sector. We also did, in case of payment system. So probably, and that's the point where I want to refer it to Umar Agram, to you, probably UK IFC can play a role into that as to what is the level of achievement in different jurisdictions, dividing, countries into different categories, developing and develop. And how could a uniform structure within a jurisdiction or a country can work? Who should be the stakeholders into that? Because you have the knowledge about that much more than an individual country. So probably that's an area where you can play a role in that.
No, that sounds very interesting. And the role of the committee to bring together all the stakeholders, because like you said, there are many different scattered stakeholders, each with their own agenda, that are operating in isolation or semi-isolation, where they're not coming together. One of the points that His Excellency the Governor mentioned in the survey was regarding the challenges of implementing sustainable finance. He mentioned lack of awareness. He mentioned lack of actionable initiatives where awareness existed, how to practically implement something that you're aware that you need to do. And he talked about, capacity building as being key challenges that exist there. How do you see those challenges? What do you think is the biggest challenge that exists, particularly in this region, holding back the more mainstreaming of sustainable finance? Christian and Khaldun, if I can come to you with that question.
Yeah, it's a very good question. I think, I mean, maybe it's a global problem currently. I mean, also the governor touched on this. I mean, I see substantial risk that the recent events like the pandemic that caused supply bottlenecks and increase in commodity prices, and now the Ukraine war can derail the climate transition. I mean, it's there are studies, for example, how's it called? I think the Central Bank Alliance, the Green Finance Alliance, they have made an estimate how, let's say, between the transition cost and impact on GDP for an orderly transition, so which is gradual, and then a disorderly transition, the cost and the GDP impact would be roughly 3 to 6 times higher to 2050. And I mean, currently we are seeing disorderly effects. I mean, with the turmoil in commodity markets, substantial jump, and I mean, we still need, even if we target long-term, say, green energy production, we still need, for example, natural gas as a transition resource. I mean, whenever you have renewable energy, you need, say, something to, or you need capacity as a backup. And unless you have hydropower or maybe future other alternative, say, storage for power, then I mean you can't go without. And I mean the turmoil in commodity markets, for example, in Germany, the price for power base load since the start of the Ukraine war, or I think in the first 2 weeks of the Ukraine war, has increased 10 times relative to the last 5-year average. So there's power base load in the wholesale market. In UK, that was roughly 6 times. I mean, that can substantially cause disorder and disruption, and is a substantial issue for green transition, because you need this energy. I mean, it will take, I mean, green transition is a 20 to 30 year project. And I mean, if you have such a hiccup in the first couple of years, I mean, it's a substantial issue.
We'll stay on track, yes. Before we come to Khaldun, I say, do you want to comment very quickly, and then I'll jump.
Yeah. You see, Mustafa, the point is that even before going for the capacity building, the much important thing is that, and that's the case, is our case. We don't know what is green. The lack of taxonomy, and Khaldun, rather, when you were saying, I remember that I was part of the Sustainable Banking Network, the forum for that in 2017, and I said, oh, we are probably one of the best countries who are observing green finance because we have got the agriculture in our country. And I was absolutely wrong. So the requirement of having a taxonomy as to define as what is green or what is not green, you see, in different projects, individual, that's very important before getting into that.
Yeah. No, thank you so much for that, definitely, I think.
Getting back to the question, I think the globalization, and particularly the means that we have to observe one another, means that people in the global south are more acutely aware today of how the global north lives than ever before. And we are creating a situation currently whereby the onus of transitioning is not just. The burden of the transition is increasingly being directed towards the global south. So my market, the Africa, Middle East market in particular, and parts of South Asia as well, and Latin America, whilst there has been very little concessions made by the global north. Now, the theme of this discussion is one of virtue signaling. And it's quite interesting. I live part of the year, a few months of the year in Frankfurt, where if you go to a supermarket, it's impossible to get a plastic bag. Everything seems to be green and very, very, very environmentally sustainable. And that's true, it is. But, and people feel very proud and virtue signal around that, in fact. But the simple reality, when I compare what my neighbors in Frankfurt consume annually compared to what my neighbors in northern Lebanon, where I was born, consume, and Lebanon is not the poorest country you can go to, it's probably a factor of 10 to 1.
Wow.
My auntie survives on about 2 hours of electricity per day. How do you tell her to be more sustainable and more green? And more green? It's preposterous.
Yes.
Don't even think that she will think about saving electricity, given that it's a fantasy to wake up in the morning and have a hot shower. These are absolute concrete realities which policymakers need to address. And the discussion on this, in fact, started some 12, 15 years ago when the Copenhagen COP actually happened. And frankly, that was a big signal to emerging economies that the burden of transition is being put on them, as opposed to really creating a cultural sea change and lifestyle change in advanced economies. Unfortunately, And my CEO has pointed this out many times. Even though very little of the climate change emergency has been made in the global south, but the burden of the climate change emergency is one
Borne by them.
that will be borne by them. And currently, the impact of climate change by 2050 in sub-Saharan Africa, as an example, is 5x what it is in Europe. So yes, we do need to have the citizens of Ghana, Nigeria, Pakistan, and elsewhere being aware of the importance of transitioning to net zero and using less and recycling and reusing. But as long as we look at purely raw numbers, for example, emissions, as opposed to GDP per capita, which really determines your consumption. It's not the smokestacks in the Netherlands that determines how sustainable the Dutch people are. It's actually what Dutch people spend.
They consume.
Consume that. And as long as we're not going down that path, then a just transition remains far off. And as long as that's the case, then the political economy for a just transition and sustainability will not ensue.
No, that's a very, very interesting and I think very important point that we often lose track of when we talk about, global commitments. We lose track of, what the realities are on the ground, particularly in the developing world. Jonathan, I want to just, bring you in to comment on what, Khaldun has just said. When you do have such big disparities in consumption, in, relative positions between the developed world and the developing world, what can we do to effectively create awareness in those markets while at the same time recognizing the disparity that exists, right? How do we get sustainable, actionable change that will be adopted by the local population, given the circumstances that they exist in?
I wish I had the answer to that.
No pressure.
I don't know really. I mean, it's a very sobering sort of scenario to think about. Really, I mean, if you're saying, that the West needs to turn off electricity 12 hours a day to save the world. I mean, I don't know. It's not going to happen, is it? I don't think, unfortunately. I mean, there's, I don't know. I have a teenage daughter who's always, complaining sort of very Greta-like these days that, we've ruined the world for her. I mean, I do the same thing and blame my parents actually. It's their generation, not my generation. But I honestly, I don't know what the answer is to that question. I mean, people can change. We can have paper straws, not plastic straws, and all of this. But it seems, it's very much sort of around the edges of any more fundamental change. So I honestly don't know what the answer is to that.
And the other.
When it comes to public policy, nevertheless, in the aftermath of COP26, when there was pressure on the Philippines to invest more heavily, reducing the cutting down some of their forests, which they need, which they do to generate income, obviously, for a very poor country. It's a fine, pay us for it.
Yeah.
Which actually makes sense.
Which does, yes. And we touched very early on in the Fireside Chat about political will and political acceptability, and how it's not going to work unless that political will is there to support this. It's not going to stand purely on just its commercial values or the global impact unless there is a just sharing of that burden across multiple markets.
Party Bureau, CEO, not only is it imperative for advanced economies. I don't use the word Western, I use advanced because it's much more, it captures
reflective of the
this Western. Not only is it imperative for advanced economies to transition, but equally they must carry the emerging economy.
Yeah, that's true. I am mindful of the time, and I do want to give the audience the opportunity to be able to ask questions. So if you have a question, please do raise your hand. Please, I believe the mic system should be working. If you press the mic,
Thank you. So that's all very, it's been great to hear all of you. But since we are here on part of the UKIFC, right, and what we were all talking about without actually putting it as bluntly as perhaps I may, is that we have a contradiction between, shall we say, excessive consumerism and the unacceptable face of capitalism, which then leads to this lip service to these goals. So I would like your view on how faith-based or ethical finance then plays into that. Because for all of these to work, there has to be an element of sacrifice. Otherwise, it does not work. So if you say, okay, I am here for my returns and somehow doing this will help my returns, and perhaps it will, but most commercial entities are very short-term in their thinking. The CEO or the board is looking at the next quarter's result and his bonus, his or her bonus. So how do we play in people's faith-based values to change those mindsets? Because otherwise I'm not very optimistic. So
that's a very good question. And I think I'll turn to Christian Khuldoom, because obviously SEDCO is an Islamic bank, operates fully in compliance with Sharia, and Standard Chartered has a very strong Islamic finance proposition globally. So, you know, and particularly I like the point that there is an element of sacrifice, right? No matter how you look at it, there is going to be a sacrifice made at some point, at least in the interim. So what role can a faith-based or value-based approach take so that that becomes more acceptable to make it implementable?
From my perspective as an asset manager, I think it's of course possible to address that at an investor level, asset owner level, with say expressing investor preferences, investment beliefs, so that you, for example, have certain exclusions of activities that, for example, that you seek thematic, say, energy or efficiency, renewable strategies, impact investment strategies. So, I mean, that's definitely possible, but I mean, it needs to be addressed not just at the consumer or at the investor level. I mean, that's also pretty clear. And I mean, also, we are dealing with market failures in regards to, say, for example, climate transition or climate change. So the situation where markets fail is where you have negative externalities, where individuals overconsume certain goods, or for example, have too much emission if it's not regulated. So we need also a policy response and policy advice to address that, to address such market failures. So I mean, in theory, or at least I think it was defined in one of the earlier COPs, was that there's also a market where, say, more developed and say lesser developed countries can trade, say, emission reductions, and I mean the incremental cost of emission may be much lower than in an emerging market than in a developed market. So in that sense, it makes economic sense. So it definitely needs to be addressed at multiple levels, not just at the consumer with investor beliefs, but also at the political level.
But if I can just press you, Christian, for a second there, right? As an Islamic bank, you know, your investors have made the proactive decision to invest only in Sharia compliant and to forego many investment opportunities that don't comply with that, right? Your shareholders have made a decision to operate the institution within the rules of Islamic finance and Sharia, and to forego many different, you know, avenues of investing or funding that could be available, right? So coming from that mindset, do you feel that those same investors and those same shareholders have more of an acceptability of sustainability, more of an inclination towards accepting ESG, and maybe some of the foregone opportunities that may come about it? Or do you think that that is not really something that is like differentiates them any more than a conventional investor might be?
So I think that there's openness towards responsible investment, and especially among investors who are traditionally Islamic finance investors. I mean, they are also willing potentially to pay a price, even though, I mean, in the overall context, it's not necessarily, as I mentioned earlier, reducing return. It can actually benefit investment returns. I mean, say Sharia compliant investors for a very long time, and that's also say shown with academic research. We're paying a price for the exclusions of certain sectors. So certain sin sectors actually had higher returns than average. So there is a willingness to do that.
Excellent. I'll come to Khaldun and then Sayed, I know you want to jump in as well. And Khaldun, obviously you can see both parts of the equation, right? The conventional and the Islamic. So what's your perspective in response to this question?
Well, I guess the question was about faith-based. Firstly, one of the things that I do notice about Sharia compliant investing and conventional investing and ESG is that clearly there's an embryonic relationship between ESG and Sharia investment. Just by the practical virtue of the level of governance that is involved in becoming Sharia compliant. So already when you're investing in an Islamic instrument, you're sort of 3/4 of the way there to be compliant with ESG. But the question is deeper than that. It's about faith. It's about faith. I note that last year Pope Francis came out and said that combating climate change is a religious duty. And I'm probably a much better Muslim than I am a Catholic. I think this language resonates. And I know I grew up in an environment where any waste was considered to be haram. And it's quite interesting, as I travel throughout the Islamic world, I notice how people respond to cutting trees, to treatment of animals, to their own consumption as between halal and haram. Yeah. Right. So that language already does, it's almost inbred into us. Certainly as a child, I grew up acutely aware of what's halal and haram. I have a sister, for example, who's an activist around battery hen farming and eggs. And part of the language that she uses is that the ethical treatment of animals is in fact an Islamic obligation. Right, and the majority of people that she deals with actually are not of the Islamic faith, but it's a resonant. It's actually resonant. But to the more practical approach or the big picture sort of finance sector approach, absolutely. I mean, one of the points that my colleagues from Sadiq Bank, which is the Islamic Finance Understanding Charter, pointed out, is that the majority of people who invest through Sadiq Bank invest with them because they provide the best returns and the best outcomes. Yeah. And not all of them are Muslim or motivated by religious duty, but there is clearly a link, which is why our biggest markets are Pakistan, Malaysia, our Indian arm as well. It's inevitable. Yes. It's inevitable that it will play a faith, but it will only remain relevant as long as the returns are consistent with the global average.
You can't escape the commercial.
So Islamic finance is not just about virtue signaling. It is a empirical investment mechanism that delivers returns. Now, some people may be able to concede, a few BTs here, a few points here or there, because that satisfies the virtue signaling needs, but nevertheless, you cannot steer too far off from conventional standards.
And I think that's what Sayed also earlier mentioned, is that, adoptability comes when you see that commercial proposition, but perhaps it is that combination of faith-based and commercial proposition that could be that winning combination. So yeah, I'll let you comment. I'm mindful of time.
I'll be very quick. You see, I think the Madam Deputy Governor raised an extremely valid practical point. You see, it's not a theory. Why I'm saying that? We all agree that Maqasid Sharia of Islamic, finance resonate with the ESG. Yeah. But the question is, and that's a question that you asked, and probably I'm reposing it to the audience at UK IFC. Is the investor in ESG willing to take a clip on its return? And is the borrowing against those funds is willing to pay a bit high because the faith, because we saw that work in case of Pakistan, you see. People in those who believed in faith were willing to pay a bit premium, you see, when we had the conventional market. And probably the question is that, is there a need to re-showcase this whole thing?
No,
Thank you.
I am mindful of the time. So with that, I would like to draw the session to a close. Please join me in giving a round of applause for our fellow panelists who have provided fantastic insights.